Here we go. Hey guys, it's Ted Bogert. Welcome back to the Ted Show. It's been a while, right? Certainly a while since I've done live. But I'm excited to have Kevin Roller here. K-Dog, K-Roller. I'm sure there's all sorts of names, but if you haven't heard or you've been under a rock, I made a move to LeaderOne, the Roller Mortgage team, and I'm super excited. Kevin's genuine, generous, intelligent, funny, and he knows his mortgages like nobody else. So I wanted him to come on the show, kind of share a little bit about himself and a little bit about the cool things that make LeaderOne unique. Welcome, Kevin. We did it. How you doing?
I'm doing well. Nice to see you today, Ted.
So great.
Thanks for having me on your show. Excited.
I'm excited for you to be on the show. Like it's really, it's been a while since I've talked mortgages for a lot of reasons. And so it's so good to be able to talk with someone who actually values the relationships and understands the products. It's a 1-2 combo you don't see a lot. So very excited to have you on the show. So before we dive into LeaderOne, tell them a little bit about you.
I am currently in Mexico, so that's a little bit about me. But I am one of the owners of LeaderOne Financial. We have been around for 32 years. I've been with the company for 15. So I'm one of the top loan officers in the United States. I think I was ranked number 93 last year for units for families. Yep. And LeaderOne's an amazing company to work with. We have no overlays, so that's kind of one of the unique things about our company.
So let's talk about overlays for those people who don't know but really need to know.
Okay, so an overlay is any additional guideline on top of the agency's guidelines. So when you think about it, Fannie, Freddie, USDA, VA, FHA, they all have their own guidelines. And an overlay is a requirement on top of that guideline. So the easy example I can give is like for a veteran. If you go to a bank and you get approved for, let's say, $200,000, and that's the max they'll give you because your debt to income ratio is 50%. VA really doesn't have a DTI limit. They have a residual income limit. So you can actually go higher than 50. So that veteran may qualify for a $300,000 home. And that overlay may be preventing them from qualifying for the home they want. So if they go to, call it XYZ Bank, and they get approved for that $200,000, you may think that's all they qualify for, and that's what they think they qualify for.
Sure.
The reality of it is they may qualify for more. Another overlay would be debt to income ratio on like FHA. FHA allows for a higher debt to income ratio than 50 or 55%. And most lenders have an overlay that stops you at 50 or 55. Another one's FICO score. A lot of lenders, especially banks, may stop you at a 680 or 660 or 640. But the reality of it is VA allows you to go down to a 500 FICO. And so does LeaderOne, because that's what VA allows. FHA allows you to go down to a 500 FICO, and so does LeaderOne, because that's what they allow. So we don't have any additional requirements on top of the agency's requirements. So at the end of the day, I firmly believe we end up making realtors more money because we qualify clients that can be qualified.
Yes.
If they went somewhere else and got turned down because they had a 550 FICO score, you think they don't qualify? They think they don't qualify. And if it's a good loan officer, maybe they gave them a plan to qualify in the future. But the reality is they may have qualified right now. Yeah. And wouldn't that have been good to know?
I think people misunderstand that overlay. Give them a little bit. Is that like an added underwriting, an added layer to the loan that maybe the particular lender puts on there?
That's exactly what it is. Yeah, it's an additional requirement on top of an additional layer of underwriting on top of the guidelines. For example, Fannie Mae allows you to be in business for 1 year. And most lenders say 2. I'm sure most realtors are like, what? I thought it was 2. That's because that's what you've been told. But the reality of it is it's just 1 year. That's the guideline. And anything over that's an overlay.
So interesting to me because I kind of get the business perspective of it, but wouldn't it be better to have none of that so that you are actually getting more people into the homes, especially since they do qualify? That's the other thing. We were talking the other day about overlays, and one of the realtors said, but do they really qualify? Yes, that's what the guidelines are set up for. The overlays are what confuses the issue and muddies the water.
I mean, lenders put overlays for a reason, because they want to be conservative and they don't want to take the risk. That's really, at the end of the day, the overlay is to prevent risk. And they're risk adverse, and there's nothing wrong with that. We take the stance that the agency, their guidelines are good enough. And we found that our pay history with the clients we give loans to is just as good when we remove those overlays.
Yes. It's interesting because obviously people with credit challenges are always dinged. They're always put at a different level. And so it's very hard to come out of that. And what a cool thing for us to be able to not have to look at those overlays, but look at the actual guidelines themselves.
Yeah.
So tell me about another thing that I love that we've talked about while Kevin was here for 2 days this week. We talked about soft pulls, not the stuff that you've heard about before, but we have our own soft pulls, and it's unique, or pretty unique as far as I'm concerned.
Yeah. So any lender should be able to pull a soft pull. And a soft pull is important, but to be able to pull a soft pull and then be able to run it through DU or LP, which is the automated underwriting system for both Fannie and Freddie Mac, is unique. There's only a few lenders that were approved to be able to beta test this, if you will, or pilot it. Now, in the future, I'm sure it'll be opened up to all lenders. Right now, there's a few people that can pull a soft credit report and run it through the system to get an approval. And that's huge. And I'll tell you for a couple of reasons, really. One, the barrier of entry, right? People don't want their credit report pulled maybe. And so now you can be like, well, it's a soft pull, right? So you can bring more clients in. Two, when you do a hard credit, that client's information is sold. And we could debate whether that's right or wrong. I hate it personally, but it's sold. Equifax sells that information to other lenders, to insurance companies, to other realtors. And so within the first 24 hours, that client may get called by so many people that they tap out, they get confused, they go with a completely different lender and realtor, and you don't even know you're losing that client to the confusion that is set onto that person that applies.
Yes.
So, and then three, really, I really think that once we've pulled this off credit, we know they qualify, and we can coach them on how to opt out from that from happening to them. Right? It doesn't have to, we don't have to, because it takes up 3 to 5 days. I say wait 7 days. You can opt out 3 to 5 days later. You can have a hard credit pulled and the trigger will not be sold. Those leads cannot be sold. So you can get out of that from happening. But most clients, when they come to apply, they want to look at a house this weekend. So we don't have 7 days to wait. So the soft pull is huge.
Huge. I feel like people are told that they have a soft pull. There's so much misinformation out there about soft pulls and credit pulls and all of that. And so how awesome it is. We just did one where we did the soft pull, got the pre-approval over. It was in record time as far as I'm concerned for me.
I think some people get confused on what a soft pull is. So just to be clear, when we pull a soft pull, it's the same exact information that's on the hard pull. It's not like a credit monitoring soft pull that's not accurate. It's 100% accurate.
Yeah. Which is so important when they are going to shop. And let's talk about shopping a little bit. Weekends, evenings, talk about our availability and how that works, especially if one person, you always give the example about maybe your son's tennis match or practice.
So we really are purchase centric, meaning we put the purchase business first. We understand the client's needs, and we understand realtors' needs, and we work your hours. So we are available when you're available. That's what we pride ourselves on doing. If for some reason it's like a Saturday and I'm at my son's tennis match and an application comes in, we have a team of people that can pull it in, pull the credit, talk to the client, collect income docs. My rule of thumb is let's get to it in 5 minutes. And that's sometimes unrealistic, but we do say an hour. We do say an hour. So if it's on the weekends, nights, weekends, it goes to a team of people, and we work together to make sure that client gets taken care of.
And a lot of LOs, I've experienced this working at different companies over the years. People don't want to work past like 4 o'clock. They don't want an evening phone call. They certainly don't want to try to figure out how to get a pre-approval over on the weekends, but that's when realtors work. That's when people are off work and they can go shop. So I'm always amazed at the fact that the availability seems to be a challenge across the board. And just like Kevin said, we have a team. So talk a little bit about the team and how that works.
Well, there's a big team on the Roller Mortgage team. So we've got about 20 people. I'm unique in the fact that like I have an underwriter that reports to me, right? That doesn't happen all the time, right? So when you think about trying to get a pre-approval on the weekend and you're a loan officer at XYZ mortgage company and that underwriter clocked out at 4 o'clock on Friday, you have a hard time getting a true pre-approval, right? So we just have some unique flexibilities and efficiencies on the team. We've got marketing people on the team. We've got people that I said can pull in the docs and work them. We've got people that just work on database and work in leads. So like if you've got clients that we can't get a hold of, they call out to them. They outbound call, text, email, try to make the most out of your leads. It's the whole package. Like when you talk about like, hey, I need a good lender, I need a professional lender, I need somebody who's going to execute on the back end, but I also want a partner that's going to help me create more business, and I need somebody that can give me marketing. The reality of it is not too many people can do that without a team. Because if you're a loan officer, you're out there networking, talking to people, trying to make some relationships. And while that's happening, while we're doing this show right now, if an application comes in and it was just me and I'm on an island, or just Ted and he's on an island, that it may not get looked at for
right.
30 or 40 minutes. And if 3 applications come in, Katie barred the door, it may be 5 or 6 o'clock at night before I get to them all. Right.
Well, I think that's what the challenge is. So the way that we're set up, I'm business development manager, which is anybody who knows me is the dream job, the dream title, the dream setup, because I am out and about all the time. So it's very hard for an LO to be processing the loan, looking at underwriting guidelines, trying to run DU, at an event, returning a text message from a realtor. Like it is a huge challenge. And so the amazing thing about LeaderOne is they already had this position, for those of you who don't know, already had this position created long before Ted. And it's just the dream position that I've talked to so many of you about, because I can bring you to a team, but there has to be the back office. And Kevin and the team are so strong, not just on the processing, getting a loan across the finish line, but also, like Kevin mentioned, the marketing, which we won't talk about here, but I want to talk to you all about. Do some Googling on HomeBot and Manifest with us and list reports. We have some amazing opportunities for you as a realtor to help you make more money, reach more people, get more business. And we want to be a partner with you on that. Talk a little bit about the product base, our product menu.
Sure.
A lot of people say they've got this, and this, but they either hate it. Some people say, we do down payment assistance, but please don't send me a down payment assistance loan. Talk about our thought process on our product menu.
Okay, sure. It broke up a little bit. Can you hear me all right?
Yep, I can hear you great.
Okay, perfect. Okay. So obviously we have, the standard Fannie Mae, Freddie Mac conventional loans. We've got the government loans, FHA, VA, USDA. And it almost is like we have a whole sub product because we don't have overlays. So we have a whole bunch of things we can do within those products that other lenders cannot do. But we also have non-QM products. We have the DSCR, right? Debt service coverage ratio, where we can close in the name of an LLC, or just use the rents instead of the income of that individual. We have bank statement loans, 1099 loans, profit and loss loans. So we have a whole suite of warrantable and non-warrantable condo products. And down payment assistance, right? We love helping people with the down payment assistance and really helping them build wealth, because they're going to be a repeat client, right? That's not the first home they're going to buy. And then we have a whole, with that in mind, a whole suite of products for investors that are looking to purchase, up to 10 with, Fannie Mae, or 4 with Freddie Mac, or another 20 with some non-QM product. So really anything you could think of that you need help with or somebody needs financing with from 1 to 4 units, not commercial, just 1 to 4 residential.
Yes. And ask, like, this is the great part. You can ask me. And of course, Kev, we're going to, if we can find a solution, we're going to find a solution. Why would we not want you to be able to get a deal done that maybe you're not used to working on, but we have the resources. We want to be a resource for you, like a real resource, not just all right, you haven't thrown me any A paper today, so I only want to take your A paper, Mr. or Miss Realtor. We really want to be a partner with you, partner in the community and partner in what you're doing and how you're growing your business. And we can do that because we have Kevin and the team there to support, which is just, to me, such a blessing. Honestly, I can't talk enough good things about it. So K Dog is that's our nickname today, right? You had K Roll before. I am so thankful for the amount of effort that you put into building the rapport with my realtors. And actually, it's funny because it really seems effortless because you are genuine and care about the realtor and the transaction and the buyer, and you're not transactional, you're relationship oriented, which has always been a big deal for me, but always very difficult to find because LOs get so caught up in the numbers and they're trying to divide themselves into 40 different roles. But the way that we have it set up at LeaderOne, you get me, which I'll help. You'll get anybody on our team will help. We want to find a solution for you so that you can grow your business. Any final words of wisdom, Kevin, before we head out?
You know, a common question that people asked when I was meeting with them was, who do I send my clients to? And that won't change. You send them to Ted. Ted gives them the warm, the fuzzy. He speaks with them. He answers their questions. He's still a loan officer that knows about products and has knowledge. But then when the application comes in, it's me on the back end, really working on their credit, looking at their income docs, pulling the information together, figuring out which product, down payment assistance, non-QM. So you're using my knowledge on the back end to place that customer in the right situation, the right loan, the right program for their situation. So I would say that the one thing is people say, who do I reach out to? Please continue to reach out to Ted. He'll handle your clients. He'll make sure they get contacted and apply and follow up with them and follow up with you. But you can always reach out to me anytime, but Ted's really your main point of contact. So.
I'm the dude. You guys know how to reach me. Kevin, thank you so much. Thanks for coming in a whirlwind 48 hours here to Orlando. We can't wait for you to come back. We've got Alice coming next. We're here to support you all. So think about marketing. We just did an open house flyer for one of our realtor partners. We want to help you on your marketing because when you grow, we all grow. And so we want to be a real partner with you. Thanks so much, Kevin. Y'all have a fantastic weekend. Cheers to all of you. Cheers. All right, guys. Thanks so much. You know where to reach me. My cell number is scrolling across the bottom there. We'll see you soon. Bye, everybody.